in the Indian space, because I am seeing that the Paytm is losing share to the Phone Pay and the Google Pay. So yeah. So who more actually and
So
the prices and at the when they list. So who has more opportunity?
So Kunj, over here, what really happened was, Mobikwik and Paytm both started out as wallets. Hello.
Yeah.
Please go ahead, AK.
Yeah, yeah. So what I'm saying is that both Paytm and Mobikwik started out as wallets. Of course, Mobikwik pivoted to BNPL, and of course now they are planning to build up on their wallet a lot. Paytm, on the other hand, instead of competing with UPI and all that, it collaborated with them, right? So the thing is, of course, even if you look at the Paytm DRHP, it does not really give out a lot of details on the kind of UPI users it has. And what is really happening with Paytm is that it has spread itself too thin. Paytm has a payments bank now. It is into insurtech. It is into wealth tech. It is into BNPL. It is into payment gateway. It scaled up a lot on the merchant side payment system. So what is really happening with Paytm is that it has a lot of moving parts, and none of them are really making any money. The only part for Paytm which is making money is the Paytm Payments Bank, and even in that they just own 49%. So it does not really move a needle for a company that is expected to get a lakh crore of valuation on listing. So yeah.
Yeah. Thank you very much. Yeah.
Hi, can I ask? Hello.
Yeah, your question please. Yeah.
So go ahead, Mr. A, ask your question, please.
I had two questions actually related to fintech. One is, since you've spoken about fintech, do you think the valuations for cred are good? Because I think it does not make sense for a payment processor to be valued so highly. And second is, you've mentioned a few companies who are into lending money, like Mobikwik. Now, Mobikwik is a payment app, but then there's also Flipkart, which is offering you pre-approved option for EMI on buying their product up to 70,000. So this is a company which has a huge footprint, and it is getting into this service, and it has products of its own which are bought by people. So do you think this will somewhere affect Mobikwik in the future? This or applications or services similar to this? Thanks.
Let me take on the cred one. Look, private equity valuations, we don't really understand how the valuations come about. On the private equity companies, even listing on the stock markets, there's one recent startup IPO that has come up. We don't really understand why is the company valued at 1 lakh crores when the company will have to pivot multiple times its business model in order to become profitable. That is the first part of it. The second part of it, specifically with respect to credit, we don't really understand what is the long-term route for the company to make money. Uh, we don't think that just by giving credit coins or just by giving cashbacks on paying credit card bills, the company will turn profitable. They will have to eventually come either into the lending business or pivot the business model uh, to that sense where the scope of the opportunity is good while making money. That is the first part of it. The second part of it is buy now, pay later, or the credit that companies are really giving. Look, the competition here is intense. Therefore, wafer thin margins are there out there. Uh, People like Amazon Pay, people like own proprietary wallets with Flipkart, these guys will obviously make more money than those who are not really integrated. However, margins are very, very thin. It is just the product integration that offers extra advantage to all these OEMs that are out there, for example, Amazon. However, uh, this is not a space where margins are huge, and here the question of survival of the fittest will come in.
Sorry, one more question in relation to this. I think about a month or so, if at all you had a Kotak account, you would have gotten an email about a personal loan, pre-approved 75,000 at 26% interest or something like this. Mind-boggling. At that point, in compared to a bank, like credit is not a bank till it is valued as one, and then there are banks which are offering money at such high interest rates. In such a case, would you think the bank would get the person as the buyer for the lending business, or would it be such applications? Because the trust, of course, stays with the bank, but the valuations or the interest rate is also again incredibly high with the bank in this. Yeah, thank you.
Sorry, I could not understand your question. Can you repeat that question,
I
please?
actually, about a few weeks ago, I got an email from Kotak Bank. They were offering a personal loan about 75,000, but the interest rate was about 18 to 20%. Again, one would use this for the same purposes as buying a product from Flipkart or anything else in this matter. So, in this case, where the bank is offering at a much higher premium or interest, would you say that the bank would get the person as the person to lend to, or would it be such applications or fintech applications? Should I repeat myself?
No, look, the point here is that I don't know how that mail came into you or what is the sourcing strategy for a Kotak bank as such when it was sending that mail. But it is very, very simple. The interest rates to a large part of the economy are regulated, even though the bank was charging 18%. RBI rules do suggest that the spread should be capped at 10%, and that's about it. That is the first point that is out there. What fintechs will really do, how fintechs will help banks is to uh, further their reach that is out there. Those people who are not taking loans, fintechs will help banks to uh, give loans, push credit into the hands of those people that are out there. Some of them will be subprime, some of them will be of good quality that is out there. It is a mixture, and it is upon the banks to see how the underwriting will work out. And they want to lend to everybody, or they want to go ahead and pick and choose to whom they want to really lend.
Got it. Thank you so much. Thank you.
Thank you. Prasant ji, your question, please.
Hi, can you guys hear me?
Yeah.
Yes,
Hi,
yes,
hi.
yes.
Good
Hi, how
evening.
are you, Prashant?
Good evening, JC team. So this is regarding this BNPL which we are talking about, right? So of course, I agree with you. This is quite old wine in the new bottle, I say. So uh, my question goes like this: say a few months back, Australian fintech called Afterpay being acquired by Square, right? Jack Dorsey's, like Twitter guys. So close to 29-ish billion, right? US dollar. So do you think, yeah, this is bull market. We shouldn't talk about valuations, but there is no upper limit for valuations, right? So do you think like my question is on the Bajaj Finance, right? So do you think like Bajaj Finance can do a similar, because they are doing BNPL like from say like 10 years plus now. So will they create, is it possibility that they can create a unit and spun it off and can sell it to like a foreign players? Like I see this is a very regulated market. I don't know much about Australian regulatory thing, but how do you see like is there a possibility, or like uh, to very short, like do you buy this BNPL shit or not? Simple question.
No, so as I have already said, BNPL is a very good opportunity. That is the first point. The entire business of Bajaj Finance, let me be very clear and very open now. The entire business of Bajaj Finance over the last 10 years is BNPL. It's nothing but that. They are the ones who have mastered BNPL. They are not worried about any BNPL fintechs that are out there because they are the ones who do it, right? So will they spin it off? Absolutely not. They are the ones. This is the core business for Bajaj Finance that is out there, BNPL.
Yeah.
What they have done over the last 10 years is they will go ahead and tell OEM, look, we will get you this business. What is the margin that you are going to give us? Then they go ahead to the retail borrower who is out there and charge a specific amount of fees that are out there. So it makes fees from both sides that are out there. Then what it really does is it takes credit risk on its own books. If somebody fails to pay, Bajaj Finance is the one who suffers loss. But Rajiv Jain is the one who has aced this model, and I don't see why they're going to spin it off already. Bajaj Finance stays at obnoxious valuations, which should be very clear to people that if RBI decides Bajaj Finance will become a bank, which there's a lot of pressure on, a lot of the BNPL things that Bajaj Finance really does will have to take a back seat because a lot of it cannot be done once you are a bank.
Okay. Yeah, yeah. No, my understanding also in the similar line. So one follow-up question. So do you think is this the one of the big reason, like because of the competition from Bajaj Finance, Pine Labs going to list on Nasdaq instead of NSE/BSE?
Pine Labs and Bajaj Finance models are not really comparable.
Is it?
Bajaj Finance is definitely. So I have already said Bajaj Finance, what it really does is it ties up with OEMs, it underwrites everything, and it goes ahead and takes fees from the borrower as well. And within these, it has to take the credit risk that is out there. Pine Labs has a very different model that is there. What Pine Labs really does is that it does not have any business in credit underwriting that is there.
Yeah.
That is all left to the
Yes,
banks,
yes.
partner banks that are out
I
there.
heard you
Pine Labs,
explaining about HDFC
yes,
Bank
Pine
tie-up. Yeah.
Labs. Yes, Pine Labs does not take any interest in credit underwriting that is there. For Pine Labs, the model is very clear. Look, I will only underwrite to those customers to which the bank thinks that the credit card should be given, or the bank thinks that the underwriting should be done properly. Uh, to those customers, I will go ahead and do a BNPL sort of a thing. So from that point of view, Pine Labs is very ring fenced. It will never have any credit underlying credit risk that is out there, which is the only and the major risk that is out there inside this model. What happens when credit risk comes into the system at a time when retail NPS pile up, which was the case in 2020 COVID crisis. A lot of banks, including since we are talking about this, Bajaj Finance has taken massive write-offs during the 2020 COVID crisis because of the BNPL thing, because of the fact that they offered credit to people, and then subsequently an event happened which shook the entire world out there, right? So the point is the models are very, very different. And my point is this: today, India's market is so huge, credit is so underpenetrated that why does it have to be Bajaj Finance or Pine Labs? Why can't it be both Bajaj Finance and Pine
Yeah,
Labs?
that's a good
The
point. Yeah.
the scope of the market is so huge, credit is so underpenetrated in this country that even if the lower middle class comes to the upper middle class uh, become affluent in their living standards, there is so much scope that is out there. And mind you, Pine Labs is not a very, very old company, unlike Bajaj Finance. Pine Labs has done really well, and all good companies which apply their brain and dodge the credit risk that is out there will continue to do really, really well in the landing standards.
Yeah, yeah. So I understood. So yes. So yeah, yeah. So I'm basically done. Thank you for giving me this opportunity to ask a few questions. Yeah.
Thank you, Prasanji. Gurmeet ji, your question, please. Hi, we can hear you. Yeah.
Yeah, my question is regarding this these fintech company like this Mobikwik and Paytm and other ones. Are they a threat to these existing business banking channels like the banking like the HDFC Bank, the Kotak of the world?
Okay, I have answered this already, but I will
Actually,
definitely help you understand this better. Yeah, yeah, no worries about it. Look, at the end of the day, in this country, a number of banks are regulated by the Reserve Bank of India. If fintechs want to lend, how will they get money if they don't have any deposits? By regulation, any no entity can take deposits unless and until it is authorized by the Reserve Bank of India. And the Reserve Bank of India does not authorize a lot of companies to take deposits. Even an NBFC is not authorized by nature to take deposits until it is designated as deposit bearing NBFC. So the point is, banks are the only ones who have got massive amount of deposits that are out there. India's banking system has 100 lakh crores of deposit that is out there. Uh, on the base of that, these fintechs will use to lend. So the point is, there's no threat as such. However, there is going to be disruption in the way the banks really operate, and the banks will have to adapt to it. Banks will have to become partners of all these fintechs that are out there. You already see Google Pay using ICICI Bank network. You see Google Pay using HDFC Bank network. You see Pine Labs using HDFC Bank's network that is there. So they are partners. The faster you partner with them, the better it is. And as I end this, I will tell you about the great legend CEO that is out there in the banking sector, Mr. Aditya Puri. He once visited the Silicon Valley that is out there, and he then realized that he has to be a partner with Google. And that is what we exactly see today, that HDFC Bank is a partner with Google Pay and a lot of initiatives that with Google that HDFC Bank really shares. So the point is that there should not be this misconception that banks will get disrupted. There is no way banks will get disrupted, because today to get a banking license, uh, nobody XYZ can get a banking license. It is absolutely very difficult to get banking license.
And the like the about the consolidation of the banking, the PSU are losing the race. Do you think that this sort of trend will continue in the future also?
Look, there has been data which has just been released by RBI last week, where we already see PSU banks are further losing market share, and they will continue to lose market share at a point where 50% of India's banking sector will become private sector banks, and 50% of the banking sector will be PSU banks. It is not far off that SBI does lose its uh, crown of being the largest bank in this country, and HDFC Bank claims it. It is not very far away. Maybe 10 years down the line, it will happen, because you have to underwrite really well. You have to lend really well. Stocks may do anything. People tell me that you were bearish on SBI at 150. Look what it does not really matter. The broad underlying fact today remains this: poor underwriting of PSU banks is a fact. The SBI chairman says that 14 lakh crores of 4 lakh crores of mudra loans that we have given, we don't know how much of that will turn into NPS. The fact really remains: poor quality underwriting has been done by PSU banks, and it will not stop as such. We all know the reasons for that.
Okay, thank you, so nice of you.
Yeah, thanks.
Thank you, Gurmeet. Loknath, we have added you as a speaker. Your question, please. Yeah, Loknath, we can hear
Yes,
you.
sir. Yes, I had a question regarding results.
Yeah, sure. Please
Yeah,
go ahead.
I noticed that 2 to 3 days back, when the results are announced, the stock run very much. But the day they are announced, the next day they lose 6 to 7%. Example, I noticed in DMart, it run from 4,500 to 5,600, but the day it announced, it fell from 60 near about 6 to 7% and closed on 4,900. Why does it happen?
Okay. Let me tell you this very simple reason. There are two things uh, to a result: there is business performance and there's stock performance. You have to first decipher how the business performance is. For example, I just gave you an example of L&T Infotech that is out there. If L&T Infotech surprises the street, the stock will go up. If L&T Infotech does not deliver on what the street is expecting, the stock will go down. As simple as that. Stock performance and business performance are different things. For example, Jubilant and Gravia reported results today. The results were spectacular. However, the stock was minus 10. Results don't have to do anything with stock performance. It is the positioning of the market with respect to the stock which decides what really happens to the stock. If the company reports bad result, might as well be that the stock is up. If the company posts good results, might as well be the stock may be down. It depends on the positioning of the market with respect to the stock that is out there. So never buy a stock just with respect to the result anticipation that is out there. This is number one learning that the market will give you if you go ahead and trade in the market. If you go ahead and learn about the market, never trade a stock with respect to the result expectations that are out there. Always be a long term investor, or always buy very high quality companies that are out there. Result expectations have nothing to do with stock price movement as such. It is just the positioning of the market with respect to the result that really decides what happens.
Kridan, we have added you as a speaker. Your question, please. Amit, we have added you as a speaker as well. Your question, please.
Thank you. Thank you for the opportunity.
Yeah, Amit, we can hear you. Yeah, your question,
Thanks.
please.
So, how do you see the FMCG pack results today? HUL has posted the result, especially the volume growth. They have reported as a 4% volume growth. So, how do you see the FMCG pack results? Nestle also posted the result.
Yeah. So, what is really going to happen with FMCG is that the past 4 to 6 quarters were really good for FMCG. A lot of pantry stocking, a lot of pent up demand had come in. Uh, so a really good way to understand FMCG is this. During the pandemic, what was really happening is that you were doing 2, 3, 4x of your usual shopping. So, for example, if you were buying a month's worth of essential goods before, you were buying say 3 months ka essential goods during the COVID times. So of course, now that a lot of that is easing out now, the volume growths are starting to revert towards mean. Because if you see, a lot of companies had reported double-digit, lifetime high volume growths over the past few quarters. At the same time, what is happening is that number one is the volume growths have started reverting to mean. Number two is that a lot of raw materials that goes into FMCG products has seen a steep inflation. Of course, there are two parts to it. There is domestic, there is exports. On the export side, there is a lot of freight cost, ocean freight cost, like I just spoke about in the opening remarks. And of course, there is crude oil, there is packaging, there is vegetable oil, there is fats which are going up as well. So overall, going forward, what is going to happen with FMCG is that the margins are going to get hit. The volume growths are starting to revert back to mean. Can't really say about valuations, what is going to happen, but yeah, at the current juncture, the FMCG, valuations are not really comfortable.
Actually, Nestle and all, they are trading above their mean P ratio or valuation, whatever the past 3 year, 5 year mean, even all FMCG pack, according.
Absolutely,
they are trading.
Yeah, so they are all trading at their lifetime high
valuation. But in future, the valuation may correct the according to the profit valuations may correct. Thank you.
So definitely. So yeah.
Thank you.
Definitely.
Thank you so much for your wisdomful answers. Thank you, sir.
Thank you, Amit. Milan, your question, please.
Yeah, hi. So we are seeing a lot of BNPL players coming into the segment, into the industry now. So do you see a challenge that each of these individual company going and tying up with online and offline players where their payment is accepted? And then is there a scope of a facilitator or a network service provider, like in cards we have Visa and MasterCard? Do you see a scope of such a service facilitator or network provider coming into the picture, the potential?
Definitely, Visa and Mastercards are the ones who are facilitating the BNPL networks that are out there. Uh, is not a issue that is there on the Pine Labs platform. Both these card makers or BNPL providers are already out there. On the Visa con call that is there, Visa is already saying that we are ready with the BNPL network that is out there. It is up to banks, lenders, fintechs to see how they can integrate with us. So they are always there. The technology must be there. So what is the use of Visa is this, that within minutes they are able to communicate, within not minutes, within seconds they are able to communicate within with the lender and decide if they want to give a loan or not. So that's the whole point that is out there, and these guys will continue to do well, and these guys will be the ones who will be facilitating the BNPL. Look, BNPL is equal to credit cards, as simple as that. Both of them do the same thing.
Okay, so Visa and MasterCard are already in that. Okay, I was not aware of this. Thanks a lot for that.
Thank you. So, guys, that was the last question for the evening. As always, thanks a lot for asking really thoughtful questions. If any, I see that there are a lot of requests still pending. So, if you have any questions, feel free to DM AS or us in our message section, and we'll try to answer them. Stay tuned. We'll do more of these sessions and come back soon. Yeah. Thanks a lot. Good night, guys. Take care.
Thanks a lot,